Okay, let's get the big picture of the stock markets. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We will look at, the total world stock market ETF, the WT. Pretty big distance here from the 52-week lows. The bulls have been in charge, relatively close here to the 52-week highs. When we look at the seasonality, we do have a problem. At least if you are a bull, and that is that January is one of the weakest months for VT. It certainly gets, stronger for the bulls heading to the grand April, which closes higher 83% of the time. But definitively January is weak. That's the fact based on all the history we have here. When we look at the charts, this is all the history we have. We can see the following. If you look at RSI, this security doesn't like to be overbought, nor really oversold. As such, high RSI is a risk. When we look here at the distance from some of the key moving averages, you can see that the green 50-week moving average and also the blue 100-week moving average, it is, a key pullback level. We see that happened many times throughout this security's history. If we do some measurements, let's measure this rally here to this high, 49%. That's big. But if we measure this one, this is 71%. That's pretty substantial. Okay, so let's look at this move right here to this high, 59-ish%. Hence, the current move we have had is it is the biggest move without a sizable correction. If we were to pull back to the green 50-week moving average, that would mean a pullback from this high of around minus 15-ish%. That is pretty significant. And this is one of the great paradoxes of big euphoric rallies, is that yes, this is certainly a sign that the bulls are in control. It's bullish. However, it is so bullish that it can get us into problems. Like this. If we are, there's a guarantee that at some time we will have that pullback. It will become so much bigger because we went up so much so fast. When we look here at the correlation with the S&P 500, it is 90%, so there's a very strong correlation. Looking at the daily data points, 99%, so almost like approaching perfect correlation. So basically they do more or less move together. RSI here as well, we don't like to be overbought or oversold. Hence, there is risk when we are pushing that hard into the overbought levels without having had that pullback. And we are seeing some initial exhaustion here in the candlesticks. This candlestick here, which we tried to go way up, but then we closed lower. You could make a case that this is a bit of a double top formation. We need, of course, to take it with a bit of a grain of salt because the bulls have been quite aggressive. But when we look here at the accumulation distribution line, when we look at the actual move, we didn't have a significant corroboration. Hence, there's been some reduction here on volume. And volume is one of the key things to look at. Which means that the institutions, the big wallets are more careful at these very elevated levels. And they are, of course, the ones that will have the biggest impact. And they are also aware of the seasonality and the other stuff we are going to look at when we look at this indicator. So what you are seeing here is the distance percentage-wise between price and the 200-day moving average. And this is all the history we have. And you see that we we had this extreme distance from that moving average. We haven't been that far away since back here, way back during, the aftermath of the financial crisis. Hence, it's just been extreme. Based on the history, this is a very high-risk situation for the bulls. After that period back here, we did see that there was some very significant weakening. We did have a sizable pullback, and we did definitively slip here below the 200-day moving average, which you can see in red here, below that zero line. Obviously, the situation here, this low, is completely different from the low here back, during, the housing bubble. There are people who have drawn parallels, but I think that is absolutely ridiculous. Because it makes absolutely no sense that the longest bull market in history would be followed by the shortest bear, only then to be followed by the quickest recovery. That makes no sense. Hence, I do think that this entire move from this low, it is one narrative. Hence, this is one bull market. It's very important to be aware that price action itself can be viewed as a technical indicator, an indicator of the realities on the ground, the realities for the companies in this ETF. However, because the stock market investors are forward-looking, the current level here of the VT does not reflect the actual realities right here and now. It is more the projected realities. And projections can very quickly lead to errors due to, human cognitive limitations. When we look at the Finviz, look at these trend lines, we are way above here. That's also a risk factor for the bulls. Very overextended. When you look here at, the ETF, the PE ratio, 23. The S&P 500 is approaching 24. Dividend here is 1.66. Okay, decent dividend. 1.52 for the S&P 500. When we look here at the holdings, let's break it down. I do see some nice balance here between the sectors, so that is very nice to see. So great diversification. Market cap, not much diversified, but it's not a huge shock to see a bunch of large caps. Region breakdown, definitively very skewed towards North America and United States. So to sum up my take here, okay. The thing is that the bulls are technically in control at the moment, but as we have seen, when we look at the charts from many different perspectives, looking at all kinds of indicators, we are just very, very overextended, which means that the risk of a sizable correction has gone up a lot. We have put ourselves in a very tricky situation. And as far as letting the trend be our friend goes, the primary trend, looking at all the history, is that corrections are common. They are just a natural part of the VT. Given that we have been fighting the bears so frantically, we have also been fighting the overarching trend. Seasonality was bearish, the fundamentals and trend lines and you name it, all of them tell the same message. We are simply way too overextended. We are very due a correction. Hence, if you are long the VT, it makes sense to consider some kind of protection.